I'm Garrick Francis. This is Inheritance to Income, where we help families, leaders, and founders move from legacy by default to legacy by design. If you're building something for the next generation and don't know what comes next, you're in the right place. I'm your legacy advocate. Let's talk about it. I'm excited today to be joined by Tacy Paul Roby with TriBridge Partners Financial. Tacy and I go way back, and Sheila, and it's an honor to have you here. Um, and I want to really just jump right into asking you this question. So, we're trying to help people be intentional about their legacy. And people often ask, we talk about financial planning. What is financial planning? Let's just be really basic.
Sure. It's helping you figure out what are the decisions that you need to make now with your money. What are the decisions that you can let go because there some may be something that you can't control. And what are the decisions that you need to take up in a few years? And that's the written document that also identifies what do you have? What are your assets? How are they invested? Are they all in cash? Are they in stocks and bonds? And is how you have them invested supporting your goals? And because if it's all in cash and you don't need the money for 30 years, then and inflation is going to eat up your cash. So then you're not going to have that money lost. So it's the written document of writing all that out. And then what are the taxes that come into play, right? Is it going to be, are you going to, is it going to be capital gains tax, which is for most people lower than ordinary income tax? And the document lays out what are the potential taxes. Now, of course, investors and have to, the final arbiter is really your accountant and ultimately the IRS. But it's a guideline around that. And so that's what a financial plan is, that written document that lays that all out.
And who should have?
Well, I think anybody who starts out wanting to be intentional about their money. I had my first financial plan when I was probably 27 years old, but I'm a little unusual.
Should you be?
No, no. And but I was very focused on I wanted to buy a condominium. I wanted to live by myself. And I'd had roommates all my life, it seemed like. And so I was done. So I needed to sit down with somebody, and I did, a family friend, and she helped me figure that out.
Right.
And then I actually met with a financial advisor, and she put a little bit more finesse on it. So I think if you've got some kind of a goal that costs money,
Right.
that's the beginning of figuring out a financial plan.
Yeah, I work with our church does a faith and finance class, and I teach that every few months. And one of the questions always comes up: well, who should have a financial planner? Or I don't have enough to have a financial planner, or a variety of kind of. So, what are some of the misconceptions that you hear when people are trying to build a legacy and build a financial plan?
hmm I definitely hear I don't have enough to have a financial planner, and that's not true. There are a number of financial planners who work for a fee only. So even if you don't have assets for them to manage, you can pay them a flat fee to help you do a plan. There are other financial planners who charge a monthly rate. So for folks who want that kind of monthly coaching, they will do that as well. So it's often not much more than your cell phone bill and even less. So it's not about having that. So that's one, I don't have enough money. The other is not understanding that a financial advisor, I hear this too, that a financial advisor doesn't take your money. It's always your money. It's always your money. And by law, a financial advisor or financial planner can't have your money in their accounts. There has to be a third party custodian. So your money is always held by somebody else. unless it's a Bernie Madoff situation, which the reason why he got such headlines
Mm.
is because he was so unusual,
Right.
right? So I think those are two that I hear.
So one thing you and I have talked about over the years is, and you and Sharon have talked about, is there's monetary value
Hmm.
and there's meaning value.
Right.
So in your, and I know that's a lot of times I've had other financial planners who were or professionals who were more just about the numbers.
Right.
So what's up with the values?
Because, well, I think it's just part of who I am.
Yeah.
Part of it is, and I also feel like folks need to know themselves. Know thyself is that Shakespearean quote, and because it helps them make better decisions consistent with who they are and who they want their legacy, what they want their legacy to be, right? And you've talked about the first mountain and the second mountain and all that kind of thing. Sometimes that first mountain can be a lot of looking to others and their symbols of success,
Right.
which may not really be right for you. So then you end up having a red sports car, and because somebody you know has a red sports car, and then point of fact is you've got four kids who need two of whom are still in car seats.
Right.
I mean, so you kind of end up. So to avoid that, you need to say, okay, well, my value or to is family, right? I can have a red minivan, but my
We
value
had one. Right.
exactly. So that's why values, I think, helps you when you come to a decision, and we make thousands of decisions every day. When you come to a decision, you've got a sense of yourself to know which path to take. Doesn't mean you don't make mistakes, but you can course correct earlier.
Right, right. No, that's great. So, what are some tools that you have or you've used or others could use to, I say, have those unaccustomed conversations
Hmm.
or to talk about shared, to start that values conversation?
Yeah. So when someone comes to me frequently, really just sort of depends, but for the most part, I try, if it's a couple, I put two pieces of paper in front of them, and they have the exact same thing on them. It's a list of values, and I say to them, choose 3 or 5. If it's easier, cross out all the ones that don't work, right? And then I want then share them with me, and I'm going to share them back to you, because then that sets up a table conversation before we get to the money. And if you can find some common values, and usually in a married couple you can, then again, when it comes, so I use that as a tool. And therefore, when it comes to, well, I want a second home, that's great. I want to travel the world, and most families, that's a choice. You don't always get to both. Some people do. So how do you say, well, maybe we rent
Mm.
this in the same place every year, and that frees up cash to be able to travel, right? So if you have that sense of shared values. So I use that, of course. And then I also ask people what their money story is.
Mm.
How did you grow up with money? What was money thought of? What did you think about money? What was the first one of my favorite questions is when you felt money in your hand, can you remember it and how did you feel?
People still feel money.
Yeah, they still feel,
There's
I
still a lot of
know,
people.
I know.
Yeah.
But most people, even little kid, even, 25-year-olds can remember at some point when they held a dollar
Right.
or held a quarter.
Right.
And how did you feel? Did you feel scared? Was it a burden? Did you feel freedom? Did you feel shame? Did you feel excitement? And how does that play out now in your life? So I ask money story questions. Very, very important.
Yeah, that's really important. We do a lot when the Faith and Finance, we talk a lot about money mindset.
Mhm.
Like, what's your money story? Where did it
Right.
come from? What did
Mhm.
you learn around the table? Was
Right.
money discussed in your home as a
Right.
child? A lot of people it wasn't, right?
Right.
That was grown
Right.
folk
Yeah,
business.
that's
And
right.
so all of a sudden, when they got to be grown folk, they had to learn. I mean, I tell people sometimes that, you know, high school was great for me. I learned about Faulkner, but I didn't know about Forbes.
Yeah, right,
All right,
right,
they don't teach.
exactly.
They teach, and so that education part, I think, for a lot of
Yeah,
people has been missing.
yes.
And so one particular group that I wanted to ask you about, because I know you do a lot of work, is talking about women's wealth.
Mhm, mhm.
My mom taught me, my granddad taught me, but my mom really taught me about finance and
Yeah,
investing and other
yeah.
things. And I want to impart that for my, not just my son, but
Mhm,
for my daughter. And I
mhm,
know that in this great wealth transfer that we're
mhm.
in the early stages of. Yeah, I think I've seen statistics that talk about, 2/3 of the wealth will be controlled by or moving into women's hands in the very near future. So, I guess two questions are: one, um, are they prepared? Two, well, let's ask that one first, and then we'll come with the second.
So, what I observe in my practice, I'm sure there's academic research around this, is that it really depends on, there's different cohorts of women. There is certainly a large group of women who have had their own professional success and have often been involved in the investment decisions in their household and perhaps even in their parents'
Mm.
finances. So while no one is prepared for the full shock of losing someone, they have some of the basic knowledge of what needs to happen to not sell everything right away, that kind of thing, because of their own experience. There's an older cohort of women. I think of one of my neighbors. She's 80, and up until 2 years ago, she'd never written a check. And who writes checks anymore? But
Right, right.
right, but because her husband had done all of it. So she has had to work with a daily money manager to help her understand what bills had to be paid because he has dementia and how to, and now it's all electronic, it's not writing a check anymore. And so there's that cohort, and that's quite real. That there is a lot. There's still a lot of women in that cohort. And then there's the younger, I'd say 30 to 40, and they're coming into their own and they want to learn. They're eager to learn. When I do my presentations with women's groups, it is almost always the young woman, often black or brown, who's first to raise her hand to ask me, what is a stock? How do I buy a stock?
Mhm.
And they want to learn. They're eager to learn. So I'm not, so I believe, of course, everybody's going to make mistakes, but I'm confident because of that curiosity. As long as they are working with trusted people, that's fine. The 25, the 22 to 30, I find most of them are anxious. And I get concerned about that. I had a client's daughter last week, and I met her in the fall, and she's making about $70,000 a year. She's in grad school. She's a school teacher, and she called me up and she said, "Am I saving enough?" And I'm thinking, I truly didn't think about that when I was 25, but here she is. And I've got a chart. JP Morgan has a really good chart that can give me some guidelines. And I looked at it and I showed them to her. And I said, "Yes, you're fine. You've got enough. And more importantly, you have the habit of savings, right? You have the habit, the habit, the habit, the habit. As I often say, particularly for people starting out, it's not about the dollar amount. It's the habit, and it's the automation. So I think about you talk about capability and how important that is. And so, educate yourself. Look on YouTube. Look at the YouTubes of the major investment houses because that's regulated investment advice. And you can look, and they all have videos on how to get started, what's a Roth IRA, and that's a really good way to start your education.
That's great. So you mentioned some about the ways to start your financial education, but are there other ways for, depending on your cohort, women or different people, where do they plug in?
Mhm.
Where do they try, or They can be a late stage person saying, I've missed this, or they can be somebody who wants to educate their children. Where do they plug in?
Well, you teach a faith and finance class. I think churches can be a terrific way of having financial education classes. And I think, and I really love it when they're intergenerational. And I see it in synagogues too. I love it as well. And they're probably in other houses of worship. I'm just not as familiar with that. And so that's a good, really good way. The other is start with a trusted friend, just somebody who's known you and through all your good and bad, or most of your good and bad, and just say, hey, I don't know about whatever it is. Do you?
Mm.
And find a buddy, a learning buddy, and set it up for 6 months and say, hey, we're going to meet once a month and we're just going to talk about some kind of a financial accountability. And I've seen that work really well, particularly with older women. I've seen that work really well with older women. And then I also think workplace, for folks who have workplace retirement savings accounts, and when the um, provider of the workplace retirement account comes in and they do that employee education, go to those meetings. Go to those meetings. Don't skip them. That's your chance to learn questions. And all of them have tools that you can play around with and do it for, 30 minutes one week.
We've had some great conversations about estates and a number of different things. So when you think about financial planning in the context of estates and the holistic team, like
Mm-hmm.
who's part of the team and kind of
Mm-hmm.
what order and how should people be thinking about, okay, I'm on this journey. Who needs to help me? Okay, I
Mm-hmm.
have a financial planner. Who
Mm-hmm.
else do I need?
You need an estate planning attorney. Absolutely. I mean, those are sort of the two basics, plus an accountant. And TurboTax can be excellent, but sometimes if it's a little bit more complicated, TurboTax just
Right.
doesn't have a module for it, right? Particularly sometimes around real estate, or people have natural gas, they just don't have that kind of them. So you want all three, and you being you're the client, you're in charge. This is your team, and you need to say to each of them, I want you to work with each other, right? None of this competition. You work with me and for me,
Right.
right? And for me, and be very clear about that. And experienced advisors and attorneys and accountants know the drill. They know how to work together. We all have to work with different personalities and different people, and everybody knows their lane. Yeah.
Just taking a quick pause. If you like this information, if you hear something that resonates or hits home with you, we hope you'll share it with others. We certainly hope you'll subscribe. I've heard tell lots of statistics about how many people listen but don't subscribe, but that really helps us to get the message out to more and more people. So we really appreciate it. I hope you're enjoying this episode of Inheritance to Income. Inheritance to Income is brought to you by Reese Francis Studios. Whether you're preserving something for the future or creating something for today, photography, videography, and editing. Check out the link in the show notes below or check reesefrancisstudios.com. Um, Tacy, back to the conversation. So, um, you are you've done stock brokerage, you've done a lot of different things in the financial world.
Mm-hmm.
Um, so when you look at the evolution of it, kind of where's it going? And you can't have a conversation today in 2026 without asking, what's the role of AI
Mm-hmm.
in
Mm-hmm.
helping me plan my finances?
Mm-hmm. Mm-hmm. So a couple things. Well, one of the things is you hear, well, AI is just going to do away with financial planners. And I look back and I think about everybody had a computer, and all of a sudden they all went to do their own investing. And I look at the firm metrics of what was the profit margin for a financial planner, and it stayed the same for 4 decades for a financial planning firm. It stayed the same.
Wow.
And then all of a sudden, after that, there was free trading, no free, no commissions trading,
Right.
all that. So that was going to do away with financial planners. Well, yet again, the profit margin has stayed the same, and the number of financial planners has simply grown. Used to be where we were 5% of the industry. Now we're about
Wow.
35% who have the certified financial planner designation. So I think, I don't think, and I think the things that will help financial planners stay are the same things. It's the meetings, because that one-on-one or one on a family, that's where you can really help affect behavioral change if behavioral change needs to be made. And the also is the complexity. It's complexity. So I think where AI is really can be helpful is you can give AI a prompt that says something like, I'm meeting with a financial advisor next week. I think they're going to tell me to do a Roth IRA. Well, what's a Roth IRA?
Right.
So use it for definitional,
Mm-hmm.
and also make sure it gives you sources. Like it's going to give you the source so you can go back and look at that source. So I think it can be very much of a learning partner for
Mm.
you, but not a replacement
Right.
for you, for a financial. And I realize I use the term financial planner and financial advisor,
Yeah.
and that causes confusion. It's only because I've been in the industry a long time, and so I've used both terms. So technically, a financial planner is somebody who has the certified financial
Mm.
planner designation and has
That
gone through.
CFP.
That's the CFP, and that has taken the 5 or 6 courses, and sat for a formal exam, and has to do continuing education every year, and has to sign an ethics pledge every
Wow.
year. So that's technically a financial planner, and a financial advisor may have that CFP designation and done all that work, or sometimes they haven't, and they are licensed differently, and they're licensed by FINRA.
Wow.
So it's just different.
You earlier you mentioned family, and so I want to go back to that and say we focus a lot on generational impact,
Hmm.
right, across
Hmm.
generations. And so
Hmm.
how from a financial planning standpoint do you deal with generations? So
Hmm.
one,
Hmm.
two, maybe even three, maybe even four
Hmm.
generations. Right now, I think about it within our family. Sheila's mom, Sheila, her sister has kids, they have kids. So there's 4 generations
Right,
now operating.
right.
And so how do you look at that?
Well, I listen first to hear, because usually you're just meeting with one generation at first, right? Could be the parents, it could be the kids who are going to inherit the wealth. And I listen for how they're spending time together. Are they doing it showing up just at holidays, and or are they going on family trips together? Do they have a special place in the world where they all go camping every summer? Or so I listen to hear the quality of the relationships, and so I think about it that way, and I reflect that back to them in as nice of a way. Sometimes it's not as nice, but I sort of say, okay, well, so what I hear is you go to your mama's house on Christmas and you're there for exactly 3 hours. Okay. And then you leave. And they're like, yep, and we're out of there. And so I listen for that, because that's going to give me insight when it comes to, sometimes it's human nature. Sometimes kids will say, well, I know I'm going to inherit $500,000 from my parents, and that affects my financial plan. I say, we don't count that in here until you know that person has passed, and then you have actually received that money, right? Waiting on your mom to die is not a financial plan. So I listen for that, and then I ask them around. I make them aware that their chances of passing on wealth aren't very good if they don't have good family conversations, right?
That's great. So I also like folks on inheritance income to know about who I'm talking to.
Hmm.
So this question, what do you want your legacy to be?
Hmm. Thank you. Well, of course, as a mom, I want our young adult to just become the best Lee Roby they can possibly be, whatever that is. And I want them to be happy and joyous and giving back to the world. Absolutely. And as a wife, I hope that I've done something similar for my husband, that he can be the best Scott Roby he can be. And I've helped facilitate that. On the professional side, I hope I've just made investing accessible and understandable, and that people feel like they can understand why you want to do something, why you want to own a particular kind of investment. What's that going to do for you? And I hope I've made it easier for people to understand. And then I think I think also the other thing I would talk about is kindness. Just how important it is to be kind to yourself, kind to others. Kindness goes a long way.
That's wonderful. And again, thank you for joining us. Where can people find
Oh, well, thank you for asking. You can find me at tribridgepartnersfinancial.com. My email address is tacy.roby at tribridgepartners.com. And you can also find me on LinkedIn. I'm on LinkedIn a lot. And I'd love to hear from folks.
That's great. Well, look, thank you for joining us on Inheritance to Income. Thank you for all you've done for us. You have
Mm,
certainly both
thank you.
been kind and given us great information and
Great.
insight. And
Thank you.
so, if this conversation hits home, or if there's something you didn't understand, let us know. Reach out to Tacy. Be curious, intentionally curious every day about designing your legacy. Don't let your legacy be by default because these things matter. Inheritance has to come with instructions. And so I just want to thank you for the time that you have granted us. God bless.